Hello, welcome to today's episode of DIFC Unplugged. My name's Jonathan Beardall. I'm the Head of Wealth and Asset Management for the DIFC Authority. Today's very special guest is Ritesh Anand, a Senior Director at Cambridge Associates. Today we're going to be looking at trends in family offices, asset allocation and portfolio construction within the region and globally as well. Okay, Ritesh, let's get straight into it. It'd be great if you could give us a bit of an introduction on Cambridge Associates for those who are less familiar with the firm.
Great. Thank you very much, Jonathan. It's an absolute pleasure to be here. Cambridge Associates is a global investment firm. We were established in 1973. Our very first client was the Harvard Endowment, and our founders, Jim Bailey and Hunter Lewis, graduated from Harvard and went back and established the Harvard Management Company. Today, we have around $600 billion in assets, around 1,000 clients around the world, 13 offices. Our most recent office is in Dubai, in the DIFC, which we established earlier this year. And what we do is we work with institutional investors, pension funds, but increasingly working with family offices around the world to really build their investment portfolios and to help them achieve their long-term goals. Cambridge has around 1,500 employees, and they're based in 13 offices around the world. And, I'm pleased to say we've been in the Middle East for 25 years and have been working with a large number of sovereigns and institutional investors, as well as pension funds. But over the last, I would say, 10 years, we've started, we're working a lot more with family offices. And family offices in the region represent around 50% of our business. So globally, families represent a third of Cambridge's business around the world. 50% of our business is still endowments and foundations. And around the balance is pension funds and sovereigns. But what I would say unique to the Middle East is again, the work that we do with family offices, which we see as very important and probably a significant growth area for Cambridge Associates.
In the last few years, how have you seen the evolution from a regional family office hub within the DIFC to now being a global family office hub?
So, we've seen families in the region, who have historically been biased towards real estate and domestic portfolios, diversifying their portfolios and starting to look much more like a global family office. And so if I compare our global family offices and I think about asset allocation, our global families have around a third invested in private investments or private markets, around 20-25% in public markets, 20% in hedge funds, 10-15% in real estate, and the balance in fixed income. In the Middle East, I would say historically we've seen a large allocation to real estate or regional equities. And what we have seen over time is a diversification of those portfolios to what looks like much more in line with what our global families are doing. And, a lot of families in the region will come to Cambridge Associates. The one thing that makes Cambridge unique is we're independent. We're independent. We're privately held a company and therefore are able to provide truly unbiased and independent advice. We're not selling products or we're not pushing financial products of our own. And that allows families to engage in a very transparent, open discussion with Cambridge Associates around building their portfolios and really thinking strategically around what their asset allocation for the family is. Each family is different. Each family is unique. And what we really do is work with those families to tailor a portfolio that is specific to their needs. Globally, Cambridge worked with around 270, close to 280 families. And so we can draw on that experience of working with those families around the world and bring to bear sort of best practices and implement those in the region. But more importantly, I would say that we avoid some of the pitfalls. So many of the pitfalls is families that we see families have made in Europe or in the US, thinking through how families can avoid some of those pitfalls. And I'm happy to spend more time talking about those as we go through.
Okay, Ritesh, asset allocation is always evolving. What are the trends that you're seeing with family offices, both globally and then specifically the Middle East?
That's a great question. And asset allocation is never static. It's really there are two factors that drive asset allocation. One is market conditions, and then changing or evolving priorities of families. There are really three big themes that we're seeing when it comes to asset allocation. The first theme is a sort of growing trend towards private markets. So we're seeing families increasingly allocating a larger portion of their assets to private investments. They've recognized that public markets alone won't necessarily give them the long-term returns that they're looking for, and that illiquidity premium that comes with private markets provides them with a higher return. The second theme that we're seeing is much greater focus on impact investing or thematic investing, and they're around sustainability, energy transition, and technology. And much of this is being driven by next generation family members. The third key theme is liquidity. As you know, we've seen a rise in interest rates, and therefore much greater focus on ensuring that there's a balance, the right balance between sort of illiquidity in the portfolio, but also ensuring that the portfolio has sufficient liquidity. So those really are the three big themes that we're seeing when it comes to asset allocation.
Okay, thank you. And keeping to regional families, what's your experience been and the challenges that families face with building long-term portfolios?
Yeah, so I would say, when it comes to the region in particular, much like anywhere in the world, I guess the most significant challenge is around a generational transition, generational wealth, and what we see is families in the region have a concentration. So there's a significant concentration of risk in their portfolios. A lot of the families that we work with in the Middle East have a bias towards real estate or local businesses or regional equities. And so I guess the first concern is just around concentration risk and ensuring that their portfolios are diversified, not just by asset class, but also by region. And so we don't necessarily stand in the way of that. But what we really try to do when we're working with clients is ensure that gradually over time that they start to build a more globally diversified portfolio. I think the second thing is around governance. I think governance is really important. We see a lot of families, especially families in the Middle East, tend to be very large families and multi-generational families. So just ensuring that the voice of some of the younger members of the families are heard, but at the same time that there's discipline within the investment process. The third theme is just around liquidity, and I've talked about that earlier. Just ensuring that there's sufficient liquidity in the portfolio to ensure that there's wealth for current family members, but also ensuring that that portfolio is invested over the long term. And then finally, just alignment of values. You see quite significant differences between older generations and younger generations. The younger generations tend to be interested much more in sort of impact investing, sustainability, technology, and ensuring that those families, that the voices of those younger members of the families are heard. But also, again, coming back to just making sure that there's discipline within the investment portfolio.
Thank you. And look, could you give us any real-world examples? Don't worry, I'm not going to ask you for names or a case study of a regional family that you've helped to transform or restructure their portfolio over time.
So Cambridge is, over the last 25 years, Cambridge has worked with a number of family offices, without sort of naming any names or breaching any confidentiality, we worked with a family in Saudi Arabia, over the last 3 years, where the family had, almost 80% allocation to domestic real estate. And, real estate in Saudi Arabia has done particularly well. So it's very hard to argue against that and illustrate how actually diversifying the portfolio into private equity, public equities, hedge funds, where kind of long-term returns have been 8%. And this real estate portfolio has doubled every 3 years. It's quite hard making the case for diversifying that portfolio. But, we worked very hard with the patriarch of the family to highlight the benefits and of diversification and what the risks of having a concentrated portfolio in domestic real estate has, both from a liquidity perspective, but also from a sort of concentration of risk perspective. And I'm pleased to say over the last 3 years, we've kind of gradually transitioned that portfolio. We're still at 50% real estate, so we haven't got, but that 30% we've now been able to build a global public markets portfolio and start allocating to private equity. So it's still early days, but I think the biggest success for me has just been the journey that we've walked with the patriarch of the family, and really illustrating to him how the benefits of diversification will help over the long term.
Okay. And, you touched on a little bit about the next gen, the younger gen that's coming through, and they've got a real focus on ESG and sustainability. Are you seeing that reflected today in portfolio construction and also the ongoing strategy?
So for Cambridge Associates, sustainability has been a huge theme, in Europe and particularly in Europe, where we have, a very large team just dedicated to sustainability. In the Middle East, I would say that's still nascent. We have seen growing interest in sustainability amongst families, but again, that is being driven by that next generation. I can't say that we today have seen a significant commitment on the part of families to invest in sustainability. The one thing I would say is that from a return perspective, we actually haven't seen any distinct difference between returns on our sustainable portfolios versus our non-sustainable portfolios. And in fact, sustainable portfolios have done as well, if not better, than those portfolios that haven't had a focus on sustainability. So, it's certainly a theme, and I'd love to see more family offices and more investors take a closer look at sustainability in the Middle East. I mean, this is a big theme globally, and I think it's important, particularly for this region, as we go through this energy transition, to think more strategically around sustainability.
Has it started to impact manager selection yet?
I mean, absolutely has, and at Cambridge, it's it's already embedded in our manager selection due diligence process. So all of our managers will go through a sustainability screen. When it comes to implementation is where we then will tailor portfolios to specific client needs.
Okay, and how do you see DIFC evolving to be a real hub for family offices and sophisticated investors?
So, we looked at a number of jurisdictions in terms of establishing our office in the region, and the DIFC has really positioned itself at the forefront. I think the first thing is it's created a world-class ecosystem. The second thing is just around English law, common English law, and then I think the third thing is for us, it's become a tax-free environment as well, and that really means that for institutions like Cambridge Associates, but also for families that are looking to set up, the DIFC has become a sort of world class. I would say not just a regional hub, but I see the DIFC really becoming a sort of world-class hub for not just family offices and institutions like Cambridge, but also for hedge funds as well as other institutional investors.
Ritesh, well, thank you so much for coming in today. I've really enjoyed the conversation, and sharing your insights has been fantastic.
Great. Thank you very much, Jonathan. It's been an absolute pleasure. And, we're pleased to be here in the DIFC. Very much look forward to building a long-term partnership with you and with families in the region.
Thank you. Thank you for tuning in to today's episode of DIFC Unplugged. I look forward to seeing you next time.